1.8 million UK mortgage holders will see payment increases averaging £520 per month, starting in 2026 when their pandemic-era 1.75% mortgages expire and renew at 5.25%. UK Finance confirmed this in their January report. London mortgage holders face even higher increases, averaging £750 monthly. This is the largest mortgage renewal wave in UK history. Industry analysts call this the mortgage cliff. Here's what Barclays, HSBC, and Nationwide aren't telling UK homeowners. Here's what pisses me off. Banks knew this was coming for 5 years. The Bank of England set these ultra-low rates in March 2020. Mortgage lenders had 5 years to warn clients. Building societies had 5 years to factor this into affordability calculations. But nobody said anything. Now 1.8 million UK mortgage holders are getting renewal notices with payment increases they never budgeted for. Some London homeowners are seeing their monthly payments jump by over £900. The South East and North West are showing similar stress levels. Let me show you exactly what this looks like in real numbers. If UK mortgage holders locked in a £300,000 mortgage at 1.75% in 2020, their monthly payment was £1,243. When these mortgage holders renew at 5.25% in 2026, that payment jumps to £1,958. That's an extra £715 every month, £8,580 per year. For a £500,000 mortgage, UK homeowners face an increase of £1,191 monthly, over £14,000 annually. According to the Bank of England, approximately 60% of mortgage holders renewing in 2025 and 2026 locked in rates below 2.5% during the pandemic. But there's a group in serious trouble. Some variable rate mortgage holders face payment increases exceeding £500 monthly on relatively modest mortgages. Why? Because their payments haven't kept pace with interest over the past 3 years. These UK homeowners actually owe more now than when they started. When London mortgage holders in this group renew, they're dealing with both higher rates and a bigger loan. And UK homeowners are already cracking under pressure. After the Liz Truss mini-budget in September 2022 sent mortgage rates above 6%, the market never fully recovered. Now, according to the FCA, UK mortgage arrears stood at 1.2% of all outstanding balances in Q3 2025. While this remains relatively low, possessions jumped 12.3% from the previous quarter to 2,307 cases in Q1 2025. That's the highest level since 2019 Q3. UK Finance reported that 84,100 homeowner mortgages were in arrears of 2.5% or more of the outstanding balance in Q3 2025. London, the South East and the North West are showing the highest stress levels among UK mortgage holders. But here's what most UK housing analysts are missing. These are lagging indicators. The real warning sign? Consumer credit arrears are rising right now. UK homeowners pay their mortgage first, credit cards second, car loans third. When consumer credit delinquencies spike, mortgage arrears typically follow 6 to 12 months later. The pressure is building. And 2026 is when it peaks. So why is 2026 the critical year? Because this is when the mortgage renewal wave peaks. 1.6 million fixed-rate mortgages expired in 2025. Around 1.8 million are due to expire in 2026 according to UK Finance. Most of these are 2-year and 5-year fixed-rate mortgages that locked in between March 2020 and March 2021 at historic lows. UK homeowners who secured rates at 1.5 to 2.5% are now renewing at 5 to 5.5%. And even though the Bank of England has cut rates to 3.75% as of December 2025, it won't save mortgage holders who are renewing. Here's why. Mortgage rates are priced off swap rates, which is why fixed rates don't always follow Bank of England cuts. If you're locked in at 1.75% and you're renewing at 5%, even with further rate cuts, you're still facing a massive increase. The math doesn't work. So what are UK mortgage holders actually doing? According to Money Facts, there are now over 7,000 mortgage products available. 28% of homeowners are switching lenders at renewal according to UK Finance. That's up 46% from last year. UK mortgage holders shopping between Barclays, HSBC, Nationwide and other lenders can save £60 to £100 per month. Many London homeowners are extending their mortgage terms. Instead of 25 years, these UK mortgage holders are stretching to 30 or even 35 years. It lowers the monthly payment but costs tens of thousands more in total interest. The good news? Average UK house prices increased 1.7% to £270,000 in the 12 months to October 2025, according to the Office for National Statistics. But here's the risk nobody's talking about. For UK homeowners who bought in 2021 or 2022 at peak prices with small deposits, negative equity is a real risk if prices drop. These mortgage holders have no equity buffer. They can't remortgage easily. They can't sell without taking a loss. And for UK homeowners who bought at the peak with no savings buffer, 2026 is going to be brutal. If you're a UK mortgage holder renewing in 2026, here's what you need to do right now. First, shop around. Talk to at least 3 different lenders or use a mortgage broker. According to Money Facts, rate differences between lenders can be up to half a percentage point for the same borrower. On a £300,000 mortgage, that's over £75 per month in savings. Second, run the numbers on extending your mortgage term. Yes, you pay more interest over time, but if the choice is between a payment you can't afford and a slightly lower payment with more interest, choose the option that keeps you in your home. Third, speak to your lender early about the mortgage charter. 49 lenders representing 90% of the UK mortgage market signed the charter in 2023. It guarantees support options including temporary payment holidays and term extensions without affecting your credit score. Barclays, HSBC, Nationwide and most major lenders are all signatories. 1.8 million UK mortgage holders are renewing in 2026. Payment shock is real. Possessions are rising. The mortgage cliff is here. Are you renewing your mortgage this year? What kind of payment increase are you facing? Drop your city and situation in the comments. Let's see how widespread this really is across the UK.